Hello, this is John Piper again with the fifth video in the series, and we're looking at the trading pyramid on page 15 of my new book, The Way to Trade Better. This is a fairly brief chapter because the pyramid was covered in The Way to Trade itself back in the 90s, but it's such an important model for trading success that I wanted to refer to it in this book as well. Earlier, I introduced you the 5 pillars of your trading business, and these were focus, right style, right trading, right size, and then making these into winning habits, which is transformation, basically, is what we're trying to achieve here. Within these 5 pillars, you also need to get to grips with the trading pyramid, and this diagram does illustrate the trading pyramid. I'm assuming you will have a copy of the book to hand, or at least that you have a reference of the book, or indeed The Way to Trade, which of course goes into in a lot more detail. But I'll just run through the pyramid. At the bottom of the pyramid is you, your personality, and the key thing is to trade what you see, not what you think. So many traders think things, imagine the market will just fit in with what they're thinking, trade away, and of course the market does something very different. You need to see what's going on objectively, not subjectively, not instinctively, not emotionally, but to see what's actually happening and trade that. But you're the root of the pyramid, but basically you have to base everything else upon yourself and make it fit your personal style. Second level is commitment, because this is a tough business. In fact, most businesses are pretty tough. One way or the other, getting involved in any successful enterprise requires work. You've got to be committed. If you give up at the first hurdle, you're never going to get anywhere, basically. Next level is discipline. You have to be disciplined, especially with trading. You need to follow your trading rules. You have to apply stops, a whole load of different rules you've got to follow. You need to be disciplined about doing research so that you make progress, become an expert. Becoming an expert is essential to become a successful trader. The next level is money management, which just means managing your money in a sensible fashion, so you don't risk too much on any one trade. You don't run the risk of ruin. You eliminate that. Not totally, of course, because there can be black swan events that can catch you out, but the bigger your pot and the more experienced you are, the safer you are, essentially. I know many traders start off with a very small pot. Not a bad idea, in fact, because that way you can learn the ropes without risking too much money. It's a big mistake to come to the market with a great big pot of cash, and leap into the thing and see it all disappear, which has happened to too many people, myself included, I have to say, when I first started off all those years ago. Risk control is essential. Such things as being aware of major news items and tightening stops or whatever it might be, or reducing position size, so that you you cannot eliminate risk, is essential, but you do your best to keep it to a minimum. The 3 simple rules are next. We'll look at those in some detail as they're fairly critical. System parameters. At this point we start to develop our system and design our system and test our system. We'll be saying quite a lot more about this as we go forwards in this video series. This lies on to your system, your methodology, how you actually trade the markets. Once you've actually got the system, you can back test it, forward test it, paper trade it, prove you have an edge, which is all important. Once you have that, you actually start to trade. But all I've said so far, let me just show you the diagram again, because it's quite a useful one, I think. Everything so far leads up to the operation. It's when you've got all these things in place that you start to trade it, and you start to actually have your real own money in the market for real, and that's when you get the top of the pyramid, profits or losses. And the whole purpose of this book and the whole purpose of the pyramid is to build a solid pyramid so that you make profits. If your pyramid resembles the Leaning Tower of Pisa, then you haven't done a very good job, and it's back to the drawing board, basically. As I said, I explained the trading pyramid fully in my first book, The Way to Trade, and I'm not going to repeat that exhaustively here. However, it's worth giving a brief introduction, as this will be useful to all of you. The various levels of the pyramid can be grouped under the following 3 headings: trading system, money management, your psychology. 1. Trading system. This is your system for extracting cash from the markets. Believe me, the markets are very willing to give you money as long as you approach them in the right way, meaning if you use what I'm teaching you. You need to be aware that if you approach the markets in the wrong way, they can be voracious in taking your hard-earned cash away from you, so you have been warned. Your trading system includes the top 5 levels of the pyramid, albeit the very top level, profits and losses, is more the result of all the prior levels rather than a part of any particular level. So the top 5 levels, working from the bottom upwards, are the 3 simple rules: system parameters, your system methodology, the operation, and then the profits and losses. Money management, number 2. This grouping includes levels of money management and risk control, and basically sets out how you manage your money, how you control risk. So very essential levels. Your psychology, the third factor is knowing yourself, or to be more precise, it is knowing the psychology with which you approach the markets. This includes the bottom 3 levels of the pyramid. So the first of that was yourself, i.e. how you want to develop your style and focus, your commitment and your discipline, and that is the entire pyramid. In particular, it's all about ensuring your psychology remains cool, calm and collected as you place your trades. For you're in for one hell of a ride, that I can promise you. You'll be totally safe as long as you follow the rules. Be sure not to forget that. As we go forward, I'll explain how the 5 pillars tie in with the trading pyramid. Simply put, the 5 pillars are a process during which you acquire the skills to use the various levels of the pyramid, so they interact in a very useful way from a trader's point of view. The following 3 sections address these 3 groupings in turn, and the next video will be on trading systems. So until then, au revoir.